Emirates NBD has released its global investment outlook for 2023. Its theme is adapting to unpredictability. And I'm joined by the CIO at Emirates NBD Group, Maurice Gravier. Thanks so much for joining us. Now, tell us why you're focusing on longer-term portfolios and advocating income-generating assets. What types of assets in particular are we talking about here?
Well, first, thank you very much for having me. It's two questions in one. Let me start with the horizon. We believe that 2022 was not just an isolated awful year for investment with the correlation shock. We believe it was a transition to a new regime. We see the fact that, in a way, a new investment era is coming out of the disruption of the last 3 years. So looking ahead, we'll have more inflation, more volatile growth, less liquidity, and less globalization. So we need to adapt the portfolios over the long term. That's the bad news. The good news is that, as you said, income generating assets are back. The monstrosity of zero or negative interest rates is now behind us, so you can get yields without having to take outsized risks. And within bonds, what we like the most are the safest issuers, because what you can get today on a 5-year treasury bond, for example, in the US, with the federal government in the US, was what you were getting 18 months ago from high yield, non-investment grade. And we think that this is where the value is. Of course, the riskiest segments, they have higher nominal yields. However, the spread, which is the difference between what they yield and the risk-free rate, are too low given the turbulences that we expect in terms of growth.
And you're bullish on bonds, but many would say that stocks are coming off their lows and now is the time to buy equities.
Yeah, that's a great question. We're not bearish on all equities. The fact is that we are neutral on equities. The thing is that we look at, again, the backdrop, which is what happens, and we expect volatility, including in the macro factors. And we see the Fed as staying on pause for long. And second, we look at valuation. And when it comes to valuation, the issue is that we feel that stocks from developed markets are already pricing in a kind of a happy scenario, which may happen or not. So we are much more bullish on stocks from emerging markets, and we are underweight on developed markets.
So where did volatility create opportunities for investors last year, and where do you anticipate to find opportunities this year?
It's a good question. Well, it's always easy to look back and to say, oh, this was an opportunity, but what we have to look at is what was predictable and what wasn't, and a couple of things were not. Frankly, we were surprised by the war in Ukraine. It was not expected by us. We were surprised by the change in China's COVID policy. What was less surprising probably is the Q4 rally of risk assets in particular, because we had reached such a level of investors' pessimism and such a low level of positioning from the investors' community that this one was probably predictable, and I must say that we were in.
Now, you said you're bullish on emerging markets. Tell us a little bit more about your strategy and what's attractive to you in 2023.
Yes, within our broad strategy when it comes to asset allocation, the way we start the year is that we look for income in developed markets from safe sources, and capital appreciation, we believe, will come from emerging market stocks. There are two reasons which are quite simple. It's the valuation, which is much more reasonable in emerging markets. They price in a kind of trouble that we think may not happen, because the other part of the equation is growth. As we titled our outlook, unpredictability is a lot in the West about the trajectories of growth and inflation, and then the reaction function of the central banks in the middle. When it comes to emerging markets, we have better visibility, lower price, and we think that with this better valuation and growth metrics, it's an opportunity.
And which emerging markets are especially attractive to Emirates NBD right now?
Well, within emerging markets, you won't be surprised, but it's not automatic. We like the UAE because typically in this new landscape of globalization, you don't have many places where the countries are wise enough to have harmonious relations with all the different blocks that are opposing each other. We are also bullish on UAE because of valuation. We believe they don't pay for the growth. Apart from that, we like Asia, and we have, I must say, different time horizon. We consider India as a strategic long-term market to be in, because there is a real story of GDP per capita improvement and this middle class emerging, and you have high quality companies with good governance, not all of them, but many of them. So it's a long-term story. However, it's the most expensive among emerging markets, especially in Asia. So we are also positioned in China, which has this valuation angle, but probably over the long term, more questions.
Thanks so much for your insight. CIO at Emirates NBD Group, Maurice Gravier.